Herald van der Linde is head of Asia Equity Strategy at HSBC. He's joining us now to run us through what he's making of things. Herald, great to have you with us here. Thanks very much for your time. You know, we just read out that call from Jonathan Garner of Morgan Stanley earlier. I was talking about how valuations are stretched, but it's justified here in India because of the superior EPS CAGR that we have going. And of course, relatively speaking, earnings growth here looks much better. Just your thoughts, Herald. Are we sort of looking good for more here in a continuous, uninterrupted kind of a way? Or do you think this year perhaps we'll see some pauses along the way as well?
No, I think if we just look at India, for the moment, it still looks okay. I mean, we do have to acknowledge that some of the growth in India that comes because the banks have cleaned up the balance sheet. So you got some nice sort of initial effect coming through for a few years. That was last year, this year, maybe even next year. At some point in time, it will peter, but I think that's something really to worry about in the future. So the growth for India continues to look pretty decent. And you know what it is, right? It's, for example, the formal retail gaining market share over informal retail. You got new infrastructure being built and better roads and bridges here and there that flourishes trade and these sort of things. So the story from India, I think, looks pretty okay, and that's been warranted by these high valuations. The issue really is, does the global macro, is that going to help India or Asian equities in general? And for the moment, we're a little bit on shaky ground this week. That's got to do with bond yields and inflation, these sort of things.
Herald, if inflation goes, everyone thought inflation is under control and rate cuts are coming. It's not. As they say, the US 2-year heads up to 5.5%, or they say it heads up to 6%. What are we looking at then in terms of portfolio flows, and how does that influence action towards emerging markets?
Yeah, so there will be a couple of very interesting sort of flows taking place. So that's what we've seen over the last weeks, right? So bond yields have moved higher, 2, 5, 10 years in the US because, hey, these inflation numbers were not really coming down. And as you highlighted earlier on, later this week, we're going to get some more information on what the trajectory of inflation in the US is. We're still working on the assumption that prices are basically sticky and then it takes time for these inflation numbers to come down. So we're not so much overly worried yet. And I think later on in the year, we're going to see inflation drift lower and actually interest rates in the US as well. So I think we're in a temporary sort of lull. But hey, we could be wrong. So we just have to wait until data comes out and reassess that for the moment. But what does that do to flows in Asia? Now, that's interesting because at the moment what we're seeing is money's been taken out of Asia and goes into the US because the interest rates are a bit more interesting there. Now, 10-year yield is at 4.61. Hey, you can put money there away at 4.5% or maybe even 5% in certain deposits. So that's what people are doing. Money's being taken out of equities. The dollar strengthens and the yen, for example, weakens as well, and all the other currencies are a bit under pressure. If we find out that that inflation number by the end of this week is actually moving in the right direction again, and that, yes, we're on track for a June rate cut in the US, were that to happen, then that might go into reverse. The yen would probably strengthen. Money could actually come a little bit out of Japan and move into other parts of Asia. That will be an interesting sort of flow dynamic to watch. But that money that is gone to the US might actually come back into the region. So we'll just have to see. And India will play quite an important role in that. Go ahead.
Herald, hi, good morning. And it's always great speaking to you, hearing your views. But this morning, the other big headline is Reliance's numbers, right? A strong set of numbers, and just goes to show that not only are the traditional businesses like oil to chemicals doing well, but some of these new age businesses are growing at a very fast pace, like telecom, for example. For a long-term Indian watcher like you, would this be a good time to be raising your allocation to names like Reliance?
I think in general, what this tells you is Reliance is not just one company. It's actually a sort of group of businesses all clubbed together, right? So they're doing quite well. And that's just an indication of where India is at the moment in this cycle. I think there's multiple growth drivers in India at the moment, and that is fairly unique. But there will be a point in time where we're going to look back on this and say, wow, that was a fantastic time for growth in India. But that might be a couple of years out. For the moment, this is really good. And we've seen this in other markets in the past. China had this in maybe 2006, 7, 8, it was a lot of growth drivers coming through that really made it a sort of a structural story at the time. And there was another period in China, I think maybe around 2012, 13, 14, where this was the case as well. So all markets have this at one point in time. And I think in India, that's the place, that's consumption, that's investment, that is autos, that's upgrading into the products. And I think what happens with Reliance is just a reflection of that to a certain extent. So, yeah, it just gives me even more confidence than I already had in that Indian growth story.
All right. Hi, Herald. Good morning. But, the question is, what about China in the near term? And as you've mentioned in your note, X of the problematic sectors, which could be commodities as well as property, well, earnings isn't too bad. It's mid-teens, actually, and high single digits if you include that as well. What's the toss-up now between China as well as India? And are you seeing some gem funds, a higher allocation towards the Chinese market? Tell us between the toss-up between these two. One is going through a structural story, but the other one could be a tactical play.
Yeah, so the Indian story is a structural story, and it's not so cheap. That is the story. And in China, the structural story is over. That was until 2018-19. There was a good structural story, and there's a real reset in that. And you can see that in the valuations as well. But it's very easy to be very negative on China. You say, oh, property's not going, and there's a lot of problems, they're having challenges, and that's all correct. But you take some of these sectors out, and you look at, for example, what the industrials and the consumption sector does, they're growing okay. It's about 15%, and that gives a little bit of confidence to the Chinese market. And that, I think that confidence, as that comes back, that money will flow into Chinese equities, and that could well be the story for this calendar year. The question then is, where does the money come from? And I think it might actually come from Japan, maybe more so than, for example, or North Asia than India. I think India will be somewhat separated from China, more so than it was in the past.
All right, Herald, we'll let you go on that note. Thanks a lot for joining in and giving us your views on several stocks, sectors, and the Indian markets. Let's take